Let me also welcome in Mr. Jalan of GHCL. Mr. Jalan, congratulations on a solid set of numbers. Tell us about some of the key performance drivers this quarter on both the commodity chemical as well as home textile front.
If you look at the number this quarter, you will see that in the overall as a company as a whole, there is a 16% revenue growth. The revenue has gone from 757 crore to 879 crore. And EBITDA has gone up from 103 crore to 152 crore, 152 crore to 222 crore. The major benefit has come in both the businesses. In textile, we have grown by 10% in revenue, and the EBITDA has grown by 91% from 18 crore to 34 crore. In soda ash, we have grown, the revenue has grown by 19%, and your production has also gone up by 19%, and the EBITDA has gone by around 40%. Overall, company as a whole, profit after tax has gone up by 68%. From 62 crore to 103 crore.
Okay, a brownfield expansion that was previously underway, which is now on stream. Tell us, is that being fully utilized, and how much will it add to the top line, at what margin levels?
Overall production of soda ash has gone up from 209,000 to 249,000. That means we have increased the volume by 40,000 ton, which is approximately around 19%. And revenue has also gone up by 19%. The margin almost is at the same level what it was in the last quarter.
Okay, I wanted to talk about your recent presentation, which says that soda ash market has begun to show signs of a slowdown. At the same time, peers have also been adding capacity in a staggered manner. What do you envisage in pricing going on forward, given that these capacities will be coming on stream? And is there a pocket due to shortfall in China that will keep prices elevated?
Yeah, the prices are, as I said, the prices are getting softened, and there is a reduction of around 2% in the prices which we have just taken few days back. Our estimation is there will be another 2% reduction in the pricing in the third quarter. However, we will be able to maintain the margin primarily because of the two reasons. One, our volume growth as well as our efficiency, and the raw material prices are also softening. Overall, our guidance for this year is that our margin will be maintaining the same margin as we have achieved last year.
Okay. Could you also tell us a little bit about the FMCG segment, selling salt, honey, spices, powders under brand IFLO? How wide is your current distribution network, and what kind of top line and margins are you targeting to garner in?
Yeah, if you look at the in terms of the revenue growth, last year we have achieved roughly around 40% revenue growth, and we are also targeting the similar kind of a growth this year as well. And as you rightly said, we are geographically expanding. Earlier we were only present in the South India. Now our products are available in the North India as well as in the western part of the country. So we are gradually moving into the distribution channel across India.
Mr. Jalan, what are your capex plans on the anvil, and how much do you plan to spend, and particularly which segment will you deploy these funds in?
As you know that our cash flow, we have a very strong cash flow, and all the expansion which we are doing from our internal accruals. Even in the past few years we have been doing, and we are reducing our debt. The debt which used to be around 1.5, now the debt equity ratio has come down to 0.6. And in the future also, all these capex which we are talking about will be entirely from our internal accruals. And rather we will be reducing our debt going forward as well.
Okay, so just to stick to that, how much debt do you plan to repay over the next 2 years? Will you need to borrow additional funds for working capital?
We will be reducing our debt during this year by 100 crores. And in this quarter itself, we have reduced our debt by 11 crore. And we believe that the similar kind of a debt reduction will be there year ahead as well.
Fair enough. Thank you for sharing with us the outlook on your earnings. And all in all, it's been a fairly strong quarter. The capacity utilization as well has been healthy, but there has been weak yarn demand and subdued pricing.